What is an 8K? An 8K is a report of unscheduled material events or corporate changes at a company that could be of importance to the shareholders or the Securities and Exchange Commission, SEC. Also known as a Form 8K, the report notifies the public of events, including acquisitions, bankruptcy, the resignation of directors, or changes in the fiscal year. Key takeaways: the SEC requires companies to file an 8K to announce significant events relevant to shareholders. Understanding Form 8K and 8K is required to announce significant events relevant to shareholders. Companies usually have 4 business days to file an 8K for most specified items. Investors can count on the information in an 8K to be timely. Documents fulfilling Regulation Fair Disclosure, Reg FD, requirements may be due before 4 business days have passed. An organization must determine if the information is material and submit the report to the SEC. The SEC outlines the various situations that require Form 8K. There are 9 sections within the Investor Bulletin. The most recent permanent change to Form 8K disclosure rules occurred in 2004. Benefits of Form 8K: first and foremost, Form 8K provides investors with timely notification of significant changes at listed companies. Many of these changes are defined explicitly by the SEC. In any case, the form provides a way for firms to communicate directly with investors. Furthermore, investors do not have to watch TV programs, subscribe to magazines, or even wade through financial news websites to get the 8K. Form 8K also provides substantial benefits to listed companies. By filing an 8K in a timely fashion, the firm's management can meet specific disclosure requirements and avoid insider trading allegations. Companies may also use Form 8K to notify investors of any events that they consider to be important. Finally, Form 8K provides a valuable record for economic researchers. Because 8K disclosures are legally required, they provide a complete record and prevent sample selection bias. Criticism of Form 8K: like any legally required paperwork, Form 8K imposes costs on businesses. There is the cost of preparing and submitting the forms, as well as possible penalties for failing to file on time. Although it is only one small part of the problem, the need to file Form 8K also deters small companies from going public in the first place. Requiring companies to provide information helps investors make better choices. Requirements for Form 8K: the SEC requires disclosure for numerous changes relating to a registrant's business and operations. Changes to a material definitive agreement or the bankruptcy of an entity must be reported. Other financial information disclosure requirements include the completion of an acquisition, changes in the firm's financial condition, disposal activities, and substantial impairments. The SEC mandates filing an 8K for the delisting of a stock, failure to meet listing standards, unregistered sales of securities, and material modifications to shareholder rights. An 8K is required when a business changes accounting firms used for certification. Changes in corporate governance, such as control of the registrant or amendments to articles of incorporation, need to be reported. The SEC also requires a report upon the election, appointment, or departure of a director or specific officers. Form 8K must be used to report changes related to asset-backed securities. The form may also be used to meet Regulation Fair Disclosure requirements. Form 8K reports may be issued based on other events up to the company's discretion that the registrant considers to be of importance to shareholders. Thank you very much for visiting us. Tell me in the comments which financial dictionary to explain in the next video below section. We try to always share new and interesting video for you. Don't forget to subscribe to our channel. See you very soon in the next video. Goodbye.